Good morning, everybody. This is your week ahead analysis for the 28th of Feb going through to the 4th of March. So we've got a few things coming out to hit the markets in terms of releases that we could see some tradable activity from. So just to run down, we've got the official PMIs from China Monday. Tuesday, we've got the RBA policy announcement. That's going to be a key one. There's also some Chinese PMI figures come out. Manufacturing PMIs from the UK and the US, and German retail sales and US ISM manufacturing PMI. So quite a heavy day in terms of data on Tuesday. Wednesday, we've got the OPEC meeting. This is going to be a really important one. Essentially, oil is very up and down at the moment. Much of what's going on is going to be based around whatever happens with Ukraine and Russia. So it could be quite a hot meeting, that one could. The Bank of Canada policy announcement as well. Also could be closely related to this. Obviously, the Canadian dollar does react quite significantly to oil moves. So it'll be interesting to see the Bank of Canada's take. We've got a few euro releases on Wednesday, notable one being the German unemployment. We've also got some Australian PMI figures. Then Thursday, we've got the European Central Bank minutes. Australian trade balance, some more PMIs from China, PMIs from the US and UK, initial jobless claims as well. So fairly heavy. Then Friday, Australian retail sales, German trade balance, and construction PMIs, and also US labour market report. So of course, that'll be the NFP. So we've got a really heavy week at the moment. So eyes at the moment are going to be on safe haven flows in and out based on what's going on in Ukraine. But they're the key things to be watching out for. So just be careful around those releases. I'm especially interested to see what comes from the OPEC meeting. Let's hope that we get some kind of clarity in which way oil's going to be going from that. Okay, guys, so that's this week. Having a little look at what's been going on from the market open. There are a couple of things of note. So firstly, we've seen a bit of a strengthening on the dollar index. Essentially, that's based on a haven bid. So we've got safe havens flowing into the US dollar today. So we can be trading that to the upside. Just be careful though, because outside sources are suggesting that with the SWIFT ban that's happening, that could ultimately lead to a bit of a shortfall in monetary terms over in the US. And that might lead to the Fed having to boost money supply. So that could be by buying more bonds. It could be from cutting rates. We just don't know. But just bear that in mind. That's sort of like a long-term thing to consider. Euro is falling, particularly about the ban on Russian jets in EU airspace and sanctions. And of course, a general tension in the geopolitics at the moment. Pound dollar is softening down to the fact that the Tories are definitely looking at poor votes at the moment. Nothing much going on of note in the Japanese yen. Interestingly, we've seen the strongest fix since April 2018 from the People's Bank of China. So due to the broad risk aversion that suggests, the Aussie dollar in particular has been under pressure. So that's kind of where we are at the moment. So let's have a look at some charts and see if there's anything exciting in terms of setups. So let's just log on to my VPS. Okay, all right, so here we go. So let's have a little look at where we are. So if we go on to, we'll open up the charts. So we've got the US dollar versus the euro, the pound, and the Aussie. So let's just load those up ready. All right, so pound dollar, euro dollar, and the Aussie dollar. Okay, so let's have a look through each one. So Aussie dollar, if you have a look at this, you can see a big drop. So we've got a big gap in the markets where we opened up much lower than anticipated. Now what we're seeing at the moment is price is going back up. Now what you might find is this could be a short covering thing. So what happens is when you get these gaps in the market where we just see a sudden drop, a lot of people that might have already been short on the Aussie are going to be thinking, hey, I'll take those profits and close positions. Of course, that's going to force the markets in the opposite direction. So that could be a reason for that. It's not guaranteed, but that could be a reason. So in terms of levels at the moment I'm potentially interested in, the main thing I'd be looking at is a break of this session crossover to the downside. Okay. Now I am going to be also looking out to see what happens from the New York report that comes out to see whether we have any changes in sentiment. But at the moment I'm looking to short the Aussie US, and the 0.71749 would be a good level to be shorting at. That'd basically be a session crossover break to the downside. And in terms of what I'd be looking to take from the markets from that, I'd be looking at around a 25 pip stop loss and about a 50 pip take profit. Going over onto the Euro US dollar, again, very similar things are happening. So we had a big gap to the downside, and then on the market open, price has kind of like jagged up and down a little bit. So again, I'm still short biased on this. And in terms of a sell level, again, I'll be looking potentially at a session crossover, shorting this at around the 1.11449 level. And, this could be a fairly big move to trace down. But again, it's going to be interesting to see what comes from the afternoon report. Now, at the moment, you can see this high from back in this low rather from back in January is holding really strong. So I'm quite mindful of that as well. But if we do get a break of that level, I'm going to look to short. So that's going to be at 1.11449. And last but not least, the pound dollar, again, exactly the same thing. So we've had that big drop to the downside, and then prices retracing back up. So quite interesting activity to see this is. Obviously, being across all of those currencies, it's clearly dollar related. And it's going to be interesting to see what happens. So again, if I'm looking to short this based on sentiment, I'll look at 1.33495 or thereabouts. But I'm going to be very interested to see whether throughout the London session, the market just corrects this big gap, okay? And then starts to stabilise. So that's kind of where I'm at the moment. Do keep an eye out on what happens with the afternoon reports. Obviously, Chris is going to be back as well this afternoon to kind of take you through the update for the New York session too. And I'll be around. So any questions, guys, just let me know. But that's your week ahead and morning analysis. And it's today, the 28th of Feb, on a Monday. Have a good week, everybody.